Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, June the 27th, and I want to take just a brief minute to discuss what markets did last week, as it was a positive week in the markets. And the nice thing is, it was a nice recovery week for the average stock and the smaller indices, as the S&P 500 was up 61 basis points, or 0.61% on the week. The mid-cap index, as measured by the S&P 400, was up 1.26%, being the winner on the week, and the small caps, as measured by the S&P 600, were up 80 basis points, or 0.8% on the week. And as we had been talking about last week, it would have been a great time for you to take some profit from your winners and reevaluate your portfolio and preparing for some upcoming volatility. But what all eyes are going to be on this week are the PCE numbers we get tomorrow morning, which is the Fed's favorite gauge of inflation. And the question that we have is we're starting to see anecdotal evidence of slowing in the United States economy. Does the Fed foster that soft landing, or do they wait too long to cut interest rates, and do we have more of a harder landing than we could have? And so as we have seen this week, we have seen a continuation of back and forth between the Fed's going to navigate the soft landing and the narrowing of the market. So one day this week we've seen, on Monday it was a broad day, on Tuesday it was a narrow day, on Wednesday it was much more of a narrow day as well, as you're going back and forth between, as investors are weighing what the Fed is going to do. Investors have basically taken the July meeting off the table as the potential of a Fed rate cut, but we just got first quarter GDP at 1.4%, so still positive growth for the first quarter this year, but we're starting to see a little tick up in jobless claims. Retail sales was negative for the month of May, and we're starting to see signs of a consumer slowing down. We're hearing about it in some of our earnings reports, and most recently, and today, this morning, we heard it from Walgreens talking about a pinched consumer and a consumer that's stretched too far. So the question is, if the Fed waits to September and maybe even December to start cutting rates, we believe that may be a little too far for them to foster what we think is the soft landing. So as we've been discussing, expect some volatility as we head into the most volatile quarter of the year anyways, not to mention we're going to be heading into the throes of the presidential election. That's going to cause a lot of volatility and a lot of uncertainty in the marketplace. So position yourself, prepare your portfolio to pick up some steals, identify some names that you really want to buy that may be too expensive today for you to buy, or you may be at highs that you just don't feel comfortable buying it at. Wait for them to come down a little bit, and poach them at a lower price then, and buy them, as we always say, on sale. So as always, if you have questions about what's going on in the market or how you can position your individual portfolio, feel free to give us a call. We'd love to talk to you. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.